Hey guys, Mubarak here in Penny Stock. Hope you're doing well. In this video, I want to show you guys how you can actually profit six, seven, $800 in the span of just a few hours. Okay, I'm going to show you a real life case study, XNET, just this Friday, and how it shot up 107%. Okay, sounds like a lot, and it is, and that's why people like me recommend penny stocks is because even though it's volatile, even though there's some risk involved, if you understand how to play the risk and how to factor it in, you can be safe with your investing, okay? XNET was actually a stock that wasn't even on my radar. So I'm going to take you guys through the entire process, how we find the best stocks, how to analyze them, how to choose when to buy and then when to sell, okay? So the whole process. And the reason I love penny stocks is because there's always a certain rush whenever you start to get into a trade, okay? It's rare, okay? Certain trading days, if you're a careful, smart stock trader, there's a potential that you won't even have any good trades. So don't think that, because you're a day trader, you're going to be trading every day. You need to choose the most optimal and ideal setups. And usually I have a different stock screener on, FinViz, Equity Feed, TD Ameritrade. All of those are good advanced stock trading, but XNET, I was actually on the move. So I was actually just using Robinhood and Google in order to profit off of it. So I want to show you guys how you can do that. So really just from Google, right? When you type in the stock price, it'll show you this chart. And even this is a decent amount of analysis for you to be able to just do some quick research. The only reason this is not all encompassing and the reason you'll want to be in your trading platform is so that you can look at level 2 and you can look at the volume of shares being traded. That's not fully reflected here, and it'll constantly just give you a refreshed update of where the stock price is at. But let's start from the beginning, right? How did we come across this stock? Now, what happens is you always want to keep an eye on the top gainers of the day and the top losers of the day. So as soon as what we saw on Friday, right? For some reason, if you look at the 5-day, this stock was normal, no change, right? Between 230 and 235. And you can take a look here. This is where I'm reading the stock price. Over the last 5 days, no action. Okay, fairly flat. Then all of a sudden you can see it closed Thursday, October 24th at 4 p.m. That's when the stock market closes, right? And then boom, all of a sudden in the morning, it's already up a certain percentage points. Not too much, but about a good 10%. But if you look even a little bit later, now it's riding up. It's almost up 70 cents higher. That's almost about, 20, 30%. And so now this starts getting on everybody's radar. Now that's one of the reasons why I recommend trading in a chat room, because if you're in a chat room, you have a group of traders, you have a collective, people will be able to call out different stocks. Now, as with any alert, just because somebody's called it out doesn't mean it's necessarily the right time to buy, okay? And so this is when I took advantage of a new rule that I've seen has been working phenomenally in 2019, and I'm sure it's going to be good in 2020 and going forward, is I call it the double top rule. So let's dive in here a little bit, right? So now all of a sudden you're looking at let's look at just the 1-day chart. Okay, I'm zoomed in a bit so you can kind of understand it. We're looking just at a 1-day chart. Now here we see that, okay, it already peaked a bit. And then even here, there's already a certain peak that's happened, 380, 386. A lot of morning volatility, right? If you guys are interested, I'm going to make a separate video on this, but in the morning, that's when the stock market is the most volatile, the second it opens, because all of the pre-trading activity is all kind of flushing in now. All of the queued up orders that were put in, your buy order, your sell order that you must have placed overnight or in the morning before the stock market opened, all of those are being executed at the same time. All right, so in the morning, there's a lot of volatility. And then things start to calm down around 11 o'clock. So what I like to see is, okay, after all of the morning rush, where did the stock top out at? 386. Now, 386 is good. Now, usually around this time, the volume drops back down, especially around 12, lunch, it drops back down. But I've established a double top rule that has been working very well from a technical analysis standpoint, which means that on the same day, if you're following a stock that's going uptrend, like XNET, right? At this point, at 386, it was already, I think, almost up close to double. It was up like 60, 70%. So all eyes were on the stock already. And now you don't want to chase the stock, all right? That's why I want to make this video. I want to show you the hindsight of it. A lot of people are able to like talk about stocks, days later and tell you where they're going to buy and sell. But this stock, I felt I triggered it very well, and I was very happy with the profits that I made. So I want to showcase, how we were able to make about $900 in the span of a few hours. So what I saw here was 386. That's what I marked down and set it as an alert, that I was going to be alerted on my phone the second XNET got hit at 386 again. And so if you're working and a lot of questions I get asked is, how can you trade while at work, while you have another job? And this is one of the ways, okay, is if you're able to even have some sort of time to look at this stock, be activated by this chat room. I was on the go. I was busy. I was at work. I was handling things. So I just set an alert for 386 for XNET, okay? And then I got that alert somewhere around here. After lunch, I remember, I got that alert right here. Boom. This was when I knew that I could act, because I got a trigger that this is the normal high of the day, 386. So once it passed again, went higher at 230, that's a new high on the day. And that's a very important part of trading, because there's a lot of technical analysis, a lot of psychological rules that are involved in trading. And technically, the rule is that anytime a stock breaks its old high, it's called a breakout, right? When it has a point of resistance. So every time the stock is trying to go up and higher, it hits this mark, goes down. That's what you see all these peaks at. It never went up. But if it breaks through an old high, it gives a new found confidence in the stock. And that's where I knew that I was able to run. So I bought almost 1,000 shares, I believe, 1,200 shares, right around there, around 380 something. I wanted to catch it, and I was on my phone, so I did a market order. Not the smartest, but I think I got in somewhere around the 390s range. And I just got lucky. I was holding it. I was thinking I was just going to take a small profit on the go. Smart tactic here, important, okay? Because I was on the go, I was a little worried. I didn't want to lose money. I wasn't fully watching the stock, okay? So what I did was I set a trailing stop loss on Robinhood, okay, at 398 after it crossed the $4 mark. Now, let me explain that, okay? Again, trading is all psychology. When you're sitting here trading and all the other price action that's happening, the price going up and down, it's all because somebody on the other side on their screen is either implementing a buy order or a sell order based on the action, okay? So traders, and you have to understand that in today's world, in 2019 going forward, about half the trades, I would say, going on are almost automated. There's softwares, there's quant trading, there's lazy brokers just setting their numbers at whole numbers like $4. So I knew that anytime the stock would go down to $4, there would be a force to buy it. And you can take a look at that with the level 2. You can see there was 100,000 orders stacked up through the level 2. Okay, and for those of you who don't know, level 2 is a software or just a feature that trading platforms have that allow you to see the order book, okay? Because all that's going on in a stock market is that there's a bunch of buys and there's a bunch of sells. And the stock market is constantly going in whichever direction there's a higher force or a higher pull or push towards, okay? So in this scenario, I saw we broke the new high. I got alerted on my phone. I instantly went and bought 1,000 shares. Again, I didn't do a limit order, even though I always recommend it, because I just knew that there was a lot of volume and a lot of momentum going on. This was a Friday afternoon, and what happens, during these times is sometimes there's short squeezes. What that basically means, and again, I know already just in the last couple of minutes, I've gone over a lot of terms. So, feel free if you need to rewatch this video, understand it. If you have any questions at all, leave a comment below and I'll make sure, I'm able to go in detail about the answer or how to clarify the understanding for you. But I knew automatically that this was going to be a runner, because on Friday afternoons, if people are shorting, what'll happen is that so when you short, you're doing the opposite of the normal transaction. You first sell it, and then what you have to do is you have to basically have a loan out and you have to cover. So you're hoping that the stock price is going to be cheaper so you can repay your stock loan back essentially and make profit off of the difference, okay? So I'm going to make a separate video on shorting, but in general, what happens is that when there's some trouble or some, uncertainty in a stock, what might happen is that the people who have it shorts get squeezed. And so this momentum was pretty much a result of a short squeeze where a lot of people who were short didn't want to be short over the weekend. So they just wanted to cover their position and get out, close out their trade. And what that involves though for shorters is that it leads them to buy. And when they're buying, it caused a large spike of momentum upwards. And that's how we were able to profit. And I got super lucky. Even though this shows 365, I'm pretty sure I got out before 4 p.m. I was able to get out, make about 90 cents a share, around 480. So I bought it at 390, sold at about 480. And let me see if we can do the math. So I had about 90 shares. I had about a 90 cents profit off of 1,000 shares. Yeah, that's about right. I think it might have been 890 something. But it was really pretty fun because it was all within the span of about an hour and a half. The buy trigger fell around this 235, and I was out. I think I was out here somewhere. This is showing 465, but I think this was a low float stock, so there was a lot of price volatility. What you'll see when you start trading is that the price changes about every 3 to 5 seconds. And so when I was watching this around 340, there was so much volume and volatility that the price was changing about 5-6 cent increments at a time. So I was able to sell. I put in the sell order and was able to sell here. But finishing up just as one last idea that I had before, one last concept was when you put in a stop loss, right? When you put in, at least on Robinhood, when you're putting in a stop loss, that's your protection, right? That's saying that basically if the stock falls below a certain threshold, then it'll automatically sell. And the reason that's safe and smart is because then you know that you're not going to be worried about, a massive dip in the stock price and God forbid it's going in the wrong direction, it's not going higher like you thought, then you're going to be able to minimize your losses and get out of the trade. But what happens is you have to understand the trailing loss is not always the best tactic because your shares that you put, so I put about 1,000 shares at a trailing stop loss, they're now locked up. And so you have to cancel that trade before you can put in a sell order. All right. So that's, I wanted to show you guys a real case study, XNET. This stuff is going on every day pretty much now. There's a lot of fast gainers in the stock market. I honestly want to take a quick look on whether or not, yes, okay. So it's funny because, you win some, you lose some. So I actually made a good amount of money on XNET, but I was trying to follow the same philosophy on RBZ, and I unfortunately lost money. So that kind of netted out a little bit. I think I was up about $600 on the day. So still great. I want to take a look at some of these other crazy gainers here, this percentage change. But finviz.com is a great platform to be able to kind of see the change in the prices of certain stocks and keep an eye on them. But you can, I really wanted to make this an easy video to show you that you can even just do it via Google, Robinhood, all just on your phone. It doesn't require any fancy technology. It doesn't require any fancy tactics. It just requires you to be able to constantly learn and understand the patterns that are going on and then how to implement the right strategy to profit. So hope you guys enjoyed this video. We covered a lot of topics, so definitely rewatch it. And if you have any questions, you can leave a comment below or feel free to email me at admin at inpennystock.com. That way we can give you personalized custom information for your stock trading. So hope you guys enjoyed, and I'll see you guys next time. Take care.